Hello friends, good morning everyone. Welcome to the second session on Rocket Revision for CA Intermediate. So yesterday we had session 1. In that session 1 we completed up to input tax credit, that is section 18, and today's session we are going to see the remaining sections that are there for your exam. So we are starting with the registration. So up to section number 18, we have made a discussion. So that section 18 is about ITC in special cases and availment of ITC, reversal of ITC, and there is one more section also in that which I did not discuss, that is 18 subsection 3, transfer of ITC. Whenever there is transfer of ITC, so the unutilized balance in the electronic credit ledger of the transferor will go to the electronic credit ledger of the transferee. Okay, so therefore for that purpose the transferor will be filing one form, that is form GST ITC 2 is a form that will be filed by the transferor for transfer of the credit to the transferee. Okay, so that is transfer of credit. And one important point you need to remember in that is that so transferor and transferee should be in the same state. So they should not be in a different state. They both should be in the same state. And next aspect is that so in case of demerger, that is a single registration is getting separated into two registrations, because AB Limited, say for example AB Limited, so that AB Limited is split into A Limited and B Limited. Whatever is the unutilized ITC in the AB Limited will be transferred to A Limited and B Limited in the ratio of turnover, that is in the ratio of assets of A Limited and B Limited post demerger. So in that ratio the credit will be transferred from where to where? From AB Limited to A Limited and B Limited. In the assets ratio of A Limited and B Limited, the credit will be transferred. Okay, so these are the two important points that you need to remember. That is, whenever there is a transfer of business with specific provision for transfer of liabilities, the unutilized ITC in the books of the transferor will be transferred to the unutilized ITC to the books of the transferee, that is electronic credit ledger of the transferee, provided the transfer of business is with specific provision for transfer of liabilities. What is the meaning of specific provision for transfer of liabilities? Which means the business should be transferred as a going concern. Okay, the business should be transferred as a going concern. So then only it will be coming under transfer of business, ITC will be transferred. And next point is that there is a form that is required to transfer, that is form ITC 02, and both should be in the same state, transferor and transferee. And if one AB Limited gets demerged into A Limited and B Limited, then the ITC will be transferred in the ratio of assets of A Limited and B Limited post demerger. Okay, same way when a single registration is getting separated into multiple registrations, then also the same way. So whatever is the single registration that is there, that single registration so will be transferred to all the other registrations, because within the state so we can have a single registration for multiple place of business, or with respect to each place of business we can have a separate registration. So what we need to do is that from that single registration to multiple registrations, ITC will be transferred. So that is with respect to that 18 subsection 3, transfer of ITC. Then all other points we completed. Then section 22. Section 22 to section 30 deals with the provisions related to section 22 to section 30 deals with the provisions related to registration. So in that section 22, who is liable to get registered? Who is liable to get registered? So every person whose aggregate turnover exceed threshold limit is required to get registered. Okay, every person whose aggregate turnover exceed threshold limit is required to get registered. So what is that threshold limit for registration? So try to remember the threshold limit for registration. The threshold limit for registration is in case of single business, that is you are doing business only in one state. Okay, so we need to understand what is the threshold limit for registration. That's an important area, so please concentrate. What is the threshold limit for registration? What is the threshold limit for registration? The threshold limit for registration so is divided into two. That is, you are doing business only in one state. Okay, business only in one state. Business only in one state, or business in more than one state. Business in more than one state. More than one state. Okay. Suppose if the business is only in one state, so then we need to understand, so whether you are doing business in special category states. What are those special category states? M, T, N. So that is Manipur, or Mizoram, Tripura, and Nagaland. Okay. So if the business you are doing in 3 states, then the applicable limit will be 10 lakhs. What is the applicable threshold limit? 10 lakhs. So whenever your aggregate turnover exceeds 10 lakhs, then you need to register in that state. If you are doing business in any of these 4 states, that is, you are doing business only in one state and you are located in any of these states, then the applicable threshold limit will be 10 lakhs. Then if you are doing business in U-stamp states, okay, U-stamp states. What are those U-stamp states? U for Uttarakhand, then Sikkim, then Telangana, Arunachal Pradesh, okay, then Meghalaya, not Mizoram, Meghalaya, then Puducherry, Pondicherry. So in these cases, the limit will be 20 lakhs. Let it be you are engaged in goods or services or anything, the applicable limit will be 20 lakhs. Okay. You are doing business in MMT and Manipur, Mizoram, Tripura, Nagaland, 10 lakhs. U-stamp states, it will be 20 lakhs. And for other states, okay, if you are doing business in other states, now we need to check, are you exclusively engaged in supply of goods? If yes, then it will be 40 lakhs. Okay. Exclusively engaged in supply of goods. Okay. So then the limit will be 20 lakhs or 40 lakhs. Then the limit will be 40 lakhs. Otherwise means what? You are engaged in supply of services or supply of both goods and services. So then it will be again 20 lakhs only. Otherwise the limit will be only 20 lakhs. So 40 lakhs limit will not be applicable. So this is what you need to understand when you are doing business only in one state. Suppose if you are doing business in more than one state, then what we need to do? If you are doing business in more than one state, again 3 points you need to remember. That is, whether one of the state is a special category state. One of the state is MMTN. One of the state is MMTN. Out of the given state, if one of the state is MMTN and taxable supplies are made from MMTN, okay. So that is, one of the given state is in MMTN and taxable supplies are made from that state. So then the applicable limit will be 10 lakhs. Okay. Suppose if you are located in any other state, okay. So states other than MMTN U-stamp, states other than, you are doing business in states other than MMTN U-stamp, okay. MMTN U-stamp. What is it? MMTN U-stamp we have seen. If you are doing business in states other than MMTN and U-stamp and exclusively engaged in supply of goods then the limit will be 40 lakhs. Okay. In other cases, suppose if you are engaged in MMTN or U-stamp, that is U-stamp, MMTN or any other case, balancing figure. So that balancing figure, otherwise, other cases, it will be 20 lakhs. Other cases, it will be 20 lakhs. Now, it is important to note here that, you are doing business in MMTN, but you are not making taxable supplies from MMTN. Then the applicable limit will be 20 lakhs. You are doing business in MMTN, but you are not making taxable supplies in MMTN, then the applicable limit will be automatically 20 lakhs. Okay. Then, if you are engaged in pan masala, tobacco and tobacco products, exclusively engaged in supply of, if you are exclusively engaged in supply of pan masala, tobacco and tobacco products, okay, you are exclusively engaged in pan masala, tobacco and tobacco products. Okay, so pan masala, tobacco and tobacco products, comma, ice cream and edible ice. Okay, whereas in case of composition scheme, it will be what? Pan masala, tobacco and tobacco products, ice cream, edible ice, aerated waters. That two composition scheme restriction is only to a manufacturer. But here, if you are exclusively engaged in supply of pan masala, tobacco products, ice cream, edible ice, then 40 lakhs is not applicable, it will be 20 lakhs. What if I am engaged in supply of only goods? In that some goods are pan masala, tobacco products, then 40 lakhs only. So exclusively when you are engaged in pan masala, tobacco products or ice cream, edible ice, then it will be 20 lakhs. Same way here also. This 40 lakhs will also go to 20 lakhs when? So if you are exclusively engaged in supply of goods, that's okay. But that exclusive should not be pan masala, tobacco products. Exclusively engaged in pan masala, tobacco and tobacco products, then ice cream and edible ice. Okay, so then it will be 20 lakhs only. So you can be engaged in supply of goods, only goods. In that goods, few goods can be pan masala, these goods, notified goods, then 40 lakhs. If you are engaged only in supply of these notified goods, either as a manufacturer or as a trader, then 40 lakhs limit will not be applicable. So this is the threshold limit you need to know. Then one important note is also there, that is, now say for example you are exclusively engaged in supply of goods. Okay, supply of goods, and plus you have interest income, So then what will be the applicable limit? Interest income is what? So interest income is services. Even then, okay, even then, the applicable threshold limit will be 40 lakhs. Okay, so what does it mean? Say you satisfied all the conditions, means you are exclusively engaged in supply of goods. There is only one service. What is that service? Interest on loans, advances, deposits, interest income. So interest income services means partly goods, partly services. You should not get 40 lakhs, but they have given a relaxation in case of interest income. If you have interest income, still you can take 40 lakhs. Okay, so that is with respect to this registration here threshold limit. So now, persons whose aggregate turnover and financially exceed threshold limit for registration is required to get registered, and persons who are already registered under earlier law is also required to get registered. And whenever there is a transfer of business, so the transferee should get registered. But these two cases, they can, that is in these three cases perhaps, they can cancel their registration. So whenever they are no longer liable to be registered, but they have registered, then they can cancel their registration. For example, my turnover falls below the threshold limit, or I transfer the business but the transferee's turnover does not exceed threshold limit, or already registered under earlier law, so registered under GST, but under GST the turnover does not exceed the threshold limit, so they can cancel their registration. Okay, That is with respect to section 22. Then section 23, who are exempted from registration. So they are not at all required to get registered. Number one, so that is exclusively making exempted supplies. Say for example, I am engaged in sale of books only. So I am a bookshop. So bookshop engaged only in sale of books. Whatever may be the turnover, they are not required to register because they are making only exempted supplies. Then persons who are exclusively making non-taxable supplies. A petrol bunk which is engaged in sale of petroleum products only is not at all required to register. Same way, a liquor shop which is engaged in sale of only liquor is not at all required to register. What if in a petrol bunk they are selling petrol and diesel and other goods like engine oil, lubricant oil, etc. So then the aggregate turnover exceed threshold limit, they need to register. So exclusively, they should be exclusively engaged in making exempted supplies. For example, a bookshop starts selling video lectures also. So then definitely they need to register as and when their aggregate turnover exceed threshold limit, because video lectures will become taxable. So only when they are exclusively engaged in exempted supplies, they are exempted from registration. Same way, a person exclusively making supplies covered under RCM. So for example, I am an advocate. So I am providing service to a business entity. I will never pay GST. My business entity only will pay GST under RCM. So which means that I am not at all required to get registered. Then agriculturist. Who is an agriculturist? A cultivator who is engaged in sale of agricultural produce out of cultivation of land. So that agriculturist is not at all required to get registered. So whatever may be the turnover, okay. Suppose by being an agriculturist they have some turnover, and by being non-agriculturist they have some turnover. So then definitely if the aggregate turnover exceeds threshold limit, so they need to register. For example, a farmer engaged in sale of groundnut and also groundnut oil. So then groundnut turnover and groundnut oil turnover should be taken, and if the total exceeds threshold limit, they need to register. So these are the 4 cases where they are exempted from registration. Now section 23 overrides section 24, because under section 24 it says that whenever I am liable to pay GST under RCM, I need to compulsorily get registered. Say my inward supply is covered under RCM, my outward supply is also covered under RCM. As my outward supply is fully covered under RCM, I am exempted from registration. As my inward supply is covered under RCM, I need to pay GST under RCM, but I am exempted from registration. So, but as per section 24 inward supply, so I need to compulsorily register because I need to pay GST under RCM. Now section 23 will override section 24. Section 23 will override, okay. Section 23 will override section 24, which means that what? So that is, if a person is exempted from registration, they are exempted from registration only. Even though they are covered under section 24, they are exempted from registration only, and they are not required to pay any GST, okay. Because in section 24 it uses the word notwithstanding anything contained in section 22 subsection 1, but not 23, which means 23 will override 24. And 24 who are compulsorily required to get registered. So that you remember with the keyword I creations. I creations means, interstate supplier of goods, taxable goods other than handicrafts, but not services. Remember, not services, only goods. So suppose if I am engaged in interstate supply of services, am I compulsorily required to register? No. Interstate supply of taxable goods only, not even exempted goods, okay. So taxable goods. What if I am engaged in interstate supply of handicrafts? Interstate supply of handicrafts also not compulsorily required to get registered, okay. Then see, for casual taxable person. Who is a casual taxable person? Casual taxable person is a person so who comes from other state to this state and is making supply of goods or service and is not having any physical place of business in this state, so will be called as a casual taxable person. For example, lot of actors so who will be coming into this state and is not having any physical place of business in this state but start acting in some movies, will be coming under casual taxable person. If they are already registered in their state, when they are coming here, they will be treating it as interstate supply, okay. But so actually speaking, when they are not registered in their state but comes to this state, even though they don't have any physical place of business, so they are finding the opportunities to act, so then they will be coming under casual taxable person, okay. Remember, if they are already registered in that state, when they are coming here, they will be treating it as interstate supply. So then next one we have goods. Suppose if we take the goods for exhibition outside India, even though we are registered in our state, but when we are taking goods for exhibition to another state, so that definitely we need to get a CTP registration, because we will be engaged in sale of goods in that particular state. Okay, due to that reason. That is about casual taxable person. Compulsorily they need to register, but again it is other than handicrafts. If you see, a lot of handicrafts will be taken outside the state for the purpose of exhibition, they are not required to compulsorily register. Then when they need to register, if a person is not covered under section 24, they need to register only when their aggregate turnover exceed threshold limit. Okay. Then next one are for recipient liable to pay GST under RCM. So there is a recipient who is liable to pay GST under RCM, is also compulsorily required to get registered irrespective of the threshold limit. Okay. Then next, E for e-commerce operator who is liable to pay GST with respect to 3 notified services. What are they? HAT, housekeeping service, accommodation service, transportation of passengers by radio taxi, motor cab, maxi cab and motorcycle. So they need to compulsorily register. Also an e-commerce operator who is required to deduct TCS is compulsorily required to register. Okay. Then A for agent making supply on behalf of principal. There is an agent who is making supply on behalf of principal. That agent making supply on behalf of principal is also compulsorily required to register. So TEI creation, CREA. T for TDS deductor, I for input service distributor. So head office which takes the credit and distributes the credit to the branch offices is known as input service distributor. So they are also required to compulsorily register. O for OIDR supplier who is located outside India and making supply to non-taxable online recipient in India is also compulsorily required to get registered. Then N for non-resident taxable person, that is like casual taxable person, a person outside India to India who comes, who is not having any physical place of business in India, he is known as a non-resident taxable person, and that NRTP is also compulsorily required to get registered irrespective of the threshold limit. And then yes is supplier of goods through e-commerce operator, not supplier of services. Suppose if I want to sell any goods through e-commerce operator, Flipkart or Amazon, I need to compulsorily get registered. But supplier of services through e-commerce operator is not compulsorily required to get registered. So these are the cases what we have, I creations. So now whenever you see a question, you need to know whether that is covered under this I creations. Yes, compulsory registration. Otherwise, they are required to register only when aggregate turnover exceed threshold limit. But remember, if they are covered under 23, don't apply 24. They are exempted from registration itself. Then, so who is a casual taxable person? Who is a non-resident taxable person? I gave. So casual taxable person means who occasionally, so very important, occasionally. If they are coming regularly, so they will be called as a normal person and they need to register by taking a place on rent. So occasionally undertakes transaction involving supply of goods or service or both in the course or furtherance of business, whether as principal, agent or in any other capacity in a state or a UT where he has no fixed place of business. In a state or UT where he has no fixed place of business. Whereas NRTP also will be coming occasionally, who undertakes transaction involving supply of goods or service or both, whether as principal or agent or in any other capacity, or having no fixed place of business or residence in India. So that is the difference between CTP and NRTP. Then procedure for registration. So section 22, 23, 24 deals with who is required to get registered, who are exempted from registration, who are compulsorily required to get registered. 25, procedure for registration. So just 6 forms you need to remember here. REG1 is application for registration. REG2 is acknowledgement. REG3 is notice for seeking additional explanation or information. And REG4 is reply to the notice. REG5 is rejection order, rejection of application. REG6 is certificate of registration. Previously we had 2 different time limits, 3 working days and 7 working days, but now in all cases it will be 7 working days only. For example, so whenever we make application for registration, within 7 working days we should either get a notice or we need to get a registration certificate. Okay, then say we got a notice. So once we get notice, we will give reply to the notice within 7 working days, and once we give the reply from the date when they received reply, so within 7 working days, either they will grant registration certificate or they will reject the application. Okay, so that is the 7 working days. Now these 2 points are the deemed registration. Suppose if we make application for registration and so within 7 working days they did not get registration certificate or they did not give any notice, then the registration is deemed to have been granted. Same way, we made an application, we got a notice and we gave a reply to the notice. From the date when we give reply to the notice, within 7 working days, we need to get either rejection or certificate. Otherwise also it is deemed to be registered. Okay. So then section 26 deemed registration, which says that if you are registered under CGST Act, you are deemed to be registered under SGST Act, IGST Act, etc. Same way, rejection of application under one act is deemed to be rejection of application under another act. That is section 26. Then there is something called as Aadhaar authentication. So at the time when you make application for registration, you need to complete the Aadhaar authentication. So what is the time limit within which Aadhaar authentication to be completed? So within 15 days from the date when you submit part B, the Aadhaar authentication should be completed. What will happen if the Aadhaar authentication is not completed? It is as good as you file the application without selecting Aadhaar authentication, and within 30 days, so they will conduct the physical verification of the business and then only they will be granting the registration certificate. Okay. Suppose the selection itself without Aadhaar, if you have selected and filed part B, then 30 days will be counted from that date. Suppose if you select, so within 15 days you need to complete, otherwise the 30 days will be counted on expiry of 15 days. Okay. So now within 15 days you completed the authentication. The date when you complete the authentication is the date of submission of application. Okay. Suppose you are not completed within 15 days, then immediately on expiry of 15 days, you have submitted the application without authentication. So 30 days will be counted from there. Okay. Now, who are not required to undergo authentication? So remember, easy, individual. In case of individual, exception is who are required, individual. Who are not required, exception is not a citizen of India because they will not have Aadhaar number. Then HUF, so Karta is required to undergo authentication but other members not required. Then in case of partnership firm, managing or authorized partner required to undergo but others are not required to undergo authentication. And then in case of a company, body corporate or any other person, so the managing director or the authorized signatory is only required to undergo authentication but others are not required to undergo authentication. Then government and its family is excluded from authentication. So central government or state government department, local authority, then statutory body or public sector undertaking, 4 people. Okay, so this 4, central government or state government, then local authority, statutory body, public sector undertaking, and finally UIN holder. So these people are not required. First 4 points, individual, all individuals other than not a citizen of India. So not citizen of India is the exception. HUF exception, members other than Karta. Then firm exception, partners other than managing or authorized partner. Any other person other than authorized signatory not required. 4 points. Then 4 points related to government. Central government or state government, local authority, PSU and statutory body. And 9th point, UIN. So these people are not required to undergo authentication. Okay. Then we need to submit the bank details. What is the time limit within which the bank details needs to be submitted? The bank details need to be submitted within 45 days. That is at the time of application itself you can give the bank details. If you have not opened the bank account at the time of filing application, 45 days from the date of registration certificate or the due date of filing first return, whichever is earlier, is the time limit by which you need to give the bank details. Okay. Then next one, section 27, special provisions relating to CTP and NRTP. Casual taxable person and non-resident taxable person are not required to get a permanent registration. The registration that they will be getting will be a temporary registration, and therefore the registration will be valid for a period of 90 days or the number of days that they selected in the application, whichever is lower. So 90 days only, and it can be extended for a further period of 90 days as and when on expiry of 90 days they make application for renewal, but in no case it can go beyond 180 days, and they need to make application for registration at least 5 days before commencement of business, who CTP and RTP. But all other people are required to make application for registration within 30 days from the date they are liable to get registered. So normal cases within 30 days from the date they are liable to get registered, but in case of CTP and RTP, so they need to make application for registration at least 5 days before commencement of registration. Okay. Now, so these people, so at the time of making application for registration, required to make a advance tax deposit. That advance tax will be estimated net tax liability. So that estimated net tax liability, they need to estimate as to what will be their gross liability, what will be their input tax credit. So that difference is the net tax liability they need to deposit in the electronic cash ledger. Suppose if there is any excess balance in the electronic cash ledger, after their registration gets expired, so that balance will be refunded. Suppose if there is any shortfall that they need to pay, so the liability will be payable from the cash ledger, and if there is any shortfall that they need to pay further. Okay, so then that is about section 27, special provision for CTP and RTP. Then 28, amendment in registration. So whenever we submitted an application for registration, we furnish some details. If there is any change in those details, that details we need to communicate. So within 15 days, we need to communicate those details. And so what is the details? So suppose if there is a change in permanent account number, no amendment, we need to make a fresh application for registration. Why? So because whenever there is a change in permanent account number, our GSTIN itself will change. So we need to get a new registration and cancel the old registration. Okay. So that is this. In case of change in constitution resulting in change in permanent account number, amendment in registration not required, but a fresh application for registration is required to be made. Then in case of change in constitution resulting in change in PAN, what if it does not result in change in PAN? Suppose if the changes are related to NAT, N for change in name, A for change in address, and T for change in top management. Okay, so NAT, so N for change in name, A for change in address, address can be principal place or additional place, and T for top management. Okay, so N for change in name, A for change in address, and change in top management. So then amendment will be approved by the officer. Okay, so amendment in registration take place only after approval by the officer. Suppose if there is change in constitution not resulting in change in permanent account number, any other change like change in bank details, change in mobile number, change in email ID, or change in the nature of goods or services, then in that case, as and when we make application, automatically in the portal itself the change will happen. There is no need of any approval by the proper officer. So this is about section 28. Then section 29, cancellation of registration. Cancellation of registration. So total 8 cases there will be cancellation of registration. So number 1, first 3 cases, either registered person can make application for cancellation or proper officer can so motu initiate cancellation. First 3 cases, what is that? So transfer or discontinuance of business. Or number 2, change in constitution resulting in change in permanent account number. Number 3, that person is no longer liable to be registered. Maybe aggregate turnover falls below the threshold limit. So then in these 3 cases, transfer or discontinuance of business, change in constitution resulting in change in permanent account number, or no longer liable to be registered. In these 3 cases, either registered person can make application for cancellation or proper officer can initiate cancellation. Okay, so that is with respect to these 3. Then remaining 5 cases, in remaining 5 cases, so proper officer will initiate cancellation of registration. What are they? Number 1, you have contravened the provisions of the act or rules made thereunder, or you obtain voluntary registration but not commence business within 6 months, or 2 points related to returns. You are under normal scheme and you did not file returns for consecutive 6 months, or you are under composition scheme, you did not file returns for consecutive 3 quarters. Okay, then last, registration obtained by way of fraud. So these 5 cases, so wherein proper officer will initiate cancellation of registration. Okay, that is about section 29. Then section 30, revocation of cancellation of registration. Whenever proper officer initiate cancellation of registration, so then we can make an application for revocation of cancellation. Revocation of cancellation is cancelling the cancellation order, that is withdrawal of the cancellation order. So what is the time limit within which we need to make application? So within 30 days, plus it can be extended for a further period of 30 days by additional joint commissioner, plus 30 days by commissioner. So that is the time limit within which we need to make application for revocation, and we need to ensure that all pending returns are filed, so before making application for revocation. So if the proper officer is satisfied, then the cancellation order shall be revoked. That is section 30. So these are the sections that we have related to registration. Then section 31. Section 31, when invoice is required to be issued, that is due date of invoice. The due date of invoice in case of normal supply of goods. So we need to see whether supply involves movement of goods or supply does not involve movement of goods. So total 6 points are there. First one, normal supply of goods. For goods 3 points are there, and for services 3 points are there. So first one is normal supply of goods. So then we need to see whether supply involves movement of goods or supply does not involve movement of goods. Supply involves movement of goods means what? Under the contract of supply, goods are transported from one place to another place is known as supply involving movement of goods. For example, you place an order in Amazon or Flipkart. So the goods will be delivered to your location. The day when goods are delivered to your location, that is deemed that, the supply is deemed to have completed at that stage only. So which means under a contract of supply, goods are transported from one location to another location. So that is known as supply involving movement of goods. In case of supply involving movement of goods, we need to take at the time of removal. So at the time of removal, so whatever is the date, that is the due date of invoice. So they should have raised invoice at that time. Suppose if supply does not involve movement of goods, at the time of delivery, we need to give the invoice. For example, you go to a shop, you purchase the goods and you take it to your place. Now the supply is concluded in the shop itself, even though there is movement of goods, but that movement of goods is not under the supply. So therefore the date of delivery will be taken as the due date of invoice. This is in case of normal supply of goods. Then normal supply of services, if it is banking or insurance sector, 45 days from the date of completion. If it is other sectors, 30 days from the date of completion. Okay, so majorly we will be applying these 2 points only. Then we have two cases, continuous supply of goods and continuous supply of services. What is continuous supply of goods? There will be successive supply of goods for which the payments are settled on a periodical basis. That is known as continuous supply of goods. For example, through a pipeline, I am sending the raw material to your place. Say chemicals I am sending to your place. Now you will be using it on a daily basis, and whatever is the usage, based on that the payments will be settled on a monthly or quarterly basis. So that is known as continuous supply of goods. Whereas continuous supply of service means a service which takes more than 3 months to complete and involves periodic payment obligations, means installments is involved, then it will be known as continuous supply of service. Two conditions should be satisfied. Number one, it should take more than 3 months to complete and it should involve periodic payment obligation. If both the conditions are satisfied, then only it will be called as a continuous supply of service. Okay. Now, in case of continuous supply of goods, so we need to see whether payments are received based on account statement. No. So payments are received ad hoc. Without issuing account statement, the payments are received. So then the payments received date will be taken. Suppose if the payments are receivable based on account statement, then the account statement date will be taken as the case may be. Okay. So then in case of continuous supply of services, so we need to see whether the installment date is specified in the contract. If installment date is specified in the contract, such installment date will be taken as the due date of invoice. If the installment date is not specified in the contract, but the payment is linked to completion of an event. Whenever an event is completed, at the time only the payment will be received. So then the date of completion of that event will be taken. So suppose in any other case, that is neither installment due date is available nor the installment is linked to completion of an event. Example for completion of an event is construction sector, 30% completion, 45% completion, 60% completion. Depending upon the completion we will be receiving. So therefore, whenever we receive the payment based on completion, that completion date will be taken as the due date of invoice. In the absence of that information, the date on which payment is received will be taken. Okay, the date on which payment is received. Then next two cases, sale on approval or on return basis and cessation of services. Sale on approval or on return basis means first the goods will be delivered and if you will be using the goods. The day when you accept the goods, the sale is concluded. Suppose you are not accepting the goods, you will return the goods. Now in this case, only when you accept the sale is concluded, at the time only I need to give invoice. But there is a 6 months time that is added here. So you need to accept within 6 months. If you accept within 6 months, the date of acceptance is the date of supply and on that date I will raise invoice. If you are not accepting within 6 months, on expiry of 6 months, it is deemed that you have accepted. So therefore I will be required to give invoice on expiry of 6 months. So the time limit of issuance of invoice, remember 6 months from the date of removal or date of acceptance by the buyer whichever is earlier will be taken. So that is this. Then cessation of service. Cessation of service means abruptly stopping providing the service. If you are retaining any amount or if you are required to collect any amount, immediately upon cessation you need to give the invoice. Immediately upon cessation. So that is with respect to the 6 cases. So normal goods, supply involves movement of goods at the time of removal. Supply does not involve movement of goods at the time of delivery. Normal services, that is banking and insurance, 45 days. Other cases, 30 days. Then continuous supply of goods as and when the payments are received, or as the case may be, account statement is issued. And continuous supply of service, due date ascertainable in the contract, such due date not ascertainable but linked to completion of an event, such completion of event, otherwise the date on which payments are received. And then in case of sale on approval or on return basis, so that is 6 months from the date of removal or date of acceptance by the buyer, which is earlier. Cessation of service immediately upon cessation. So these are the 6 points that you need to register in your mind, because if you remember time of supply, I told you the time of supply provision is what? Due date of invoice, actual date of invoice. So actual date will be given in the question. For due date you need to refer to section 31. For that purpose it is useful. Then section 32 says that you are an unregistered person. Being an unregistered person, you are not supposed to collect GST. So therefore you need to wait till the time. You are getting the GSTIN, and only after that point of time you can raise the invoice. So until that point of time, we cannot issue invoice and recover the GST from the recipient. Okay. So then, whatever is the rate of GST that you are supposed to collect, that much only you should collect. You should not collect more than that. For example, if the applicable rate of GST is 5%, you should collect 5% only. You should not collect more than 5% and all. So if you collect more than 5%, that's a prohibition. So section 32 talks about the prohibition. So unregistered person collecting tax or collecting an amount as tax beyond the prescribed percentage, so this is prohibition that attracts penalty. Then section 33 says that, so whatever is the GST component that needs to be shown separately in the invoice, usually in invoice, so we should not include the GST and show the GST component should be shown separately. Then section 34 talks about the debit note and credit note. Already we know debit note and credit note is issued by supplier to recipient. Whenever there is an increase in the invoice value, debit note. Whenever there is a decrease in the invoice value, that is credit note. For debit note there is no time limit here, whereas for credit note there is a time limit. What is a time limit? 30th September of the succeeding financial year or date of filing and return, whichever is earlier. Already we saw one time limit like this, 16 subsection 4. 16 subsection 4, the time limit for availment of credit is what? 20th October of the succeeding financial year or date of filing and return, whichever is earlier, will be taken. Okay. So whereas here in case of 34, it is not 20th October, it is 30th September of the succeeding financial year or date of filing and return, whichever is earlier will be taken. Okay. So that is the difference here. Then after 34, 35 and 36 related to accounts and record, that chapter is not there. Then 37, returns. So returns, 37 talks about GSTR 1 and so 39 is actually GSTR 3B. So first, furnishing details of outward supply, GSTR 1. GSTR 1 is required to be filed by every registered person that contains the details of outward supplies. What is the time limit of filing that return? 11th of the month following every month. Whereas if you are under QRMP scheme, who is under QRMP scheme, whose aggregate turnover during the previous year does not exceed 5 crores, will be under QRMP. So they are required to file GSTR 1 by 13th of the month following every quarter. Okay. Whereas GSTR 3B is a monthly summary return that contains the details of inward supply, outward supply, gross liability, input tax credit and interest information. What is the time limit? Generally 20th of the month following every month. Whereas in case you are under QRMP, so when QRMP during the previous year aggregate turnover does not exceed 5 crores, then the limit will be 22nd or 24th. Okay. So for few states it is 22nd, for other states it will be 24th. Okay. That will be given in question, don't worry. So that will be taken. Otherwise you can remember Gujarat, then Madhya Pradesh, then Chhattisgarh and Andhra Pradesh, GMCA. So Gujarat, Madhya Pradesh, Chhattisgarh, Andhra Pradesh, and states below that it will be 22nd, and all other states above that it will be 24th. Okay. So who is required to file these returns? Registered person other than those opting for composition scheme. Then section 38, furnishing details of inward supplies, it's not there. 39, furnishing the details, so that is returns So this returns apart from 3B, GSTR1 and 3B normal. So the other return CMP8. CMP8 is to be filed by a person opting for composition scheme by 18th of the month following every quarter. And GSTR5 non-resident taxable person. NRTP is required to file the return by 20th of the month following every month, like 3B, or 7 days from expiry of registration, whichever is earlier. Because the registration granted to NRTP is a temporary registration now. Then GSTR 5A by a OIDR supplier located outside India, and that is by 20th of the next month. Then GSTR 6 by input service distributor, IFD. So this input service distributor who avails the credit, head office which avails the credit and distribute the credit to the branch offices is known as ISD. They need to distribute it by 13th of the month following every month. Okay. Then GSTR 7 and GSTR 8 is TDS and TCS, same time limit, 10th of the month following every month. Then GSTR 11, UIN holder. UIN holder means unique identification number holder. Who is a UIN holder? A UN organization or embassy or consulate whose outward supply is exempted. Their outward supply is exempted. On their inward supply, that is UN organization, embassy or consulate, outward supply is exempted. On their inward supply, whatever GST they paid, they will be getting as a refund. Okay. So to get that refund, they will be given an identity that is known as unique identification number. And what is the time limit of filing this GSTR 11 at the time of filing refund claim? So these are the various returns that we have along with the time limits. Then section 40 is the first return. So that first return is required to be filed by every registered person who has made outward supplies in the period between the date on which they are liable to get registered. So till the date they got registration. For example, a person is required to get registered on 5th of July. He made application by 31st July and he got registration on 8th of August. Now he will be filing first return for August month. Now August month, not only the August month details but also the July month details. Before the date he gets registration certificate, after the date he is liable to get registered. That is from 5th July onwards. So whatever is the details that should be reported in the first return, that is section 40. Then section 41, 42, 43. So claim of ITC, matching and reversal. These are not applicable for your exam. These are omitted by ICI. Then 44 is annual return. Annual return, two annual returns we have. So that is a person other than opting for composition scheme and a person opting for composition scheme. A person opting for composition scheme is required to file annual return in GSTR 4 by 30th April of the next financial year. But a person other than those opting for composition scheme is required to file annual return in GSTR 9. So that 9 is by 31st December of the succeeding financial year, and e-commerce operator GSTR 9B and 9C, those persons who are subject to audit, but GST audit is now omitted. So 9C in case of persons, so required to file reconciliation statement. 9C in case of persons required to file reconciliation statement. Reconciliation statement. Okay, persons who are required to file reconciliation statement are required to file GSTR 9C. Okay, so reconciliation statement is required to be filed whenever aggregate turnover exceeds 5 crores. Whenever aggregate turnover exceeds 5 crores, they are required to file reconciliation statement. So that reconciliation statement is in 9C. That is also same time limit, 31st December of the next financial year. Then who are not required to file annual return? There are some people who are not at all required to file annual return. Who are they? TDS deductor, OIDR supplier, NRTP, input service distributor, and casual taxable person. Remember TONIC. T for TDS deductor. So O for OIDR supplier, N for non-resident taxable person because they will not be there for a year. I for input service distributor, C for casual taxable person, again they will not be for a year. Maximum 180 days only, they will be in the business. So at a time. So due to that reason, these people are not required to file annual return. Okay. So that is about section 44. Then section 45, final return. Who is required to file final return? That is whenever my registration is cancelled. So then within 3 months from the effective date of cancellation of registration or the date on which they give the order for cancellation, whichever is later is the time limit by which I need to file final return. For what purpose? In case of section 29 subsection 5 we discussed along with 18.4, we need to reverse the ITC on closing stock. To reverse this ITC on closing stock, so here we saw, so whenever there is a cancellation of registration, so we need to reverse the ITC on closing stock. So details of that closing stock needs to be reported in the final return. So that is this section 45. Section 46, notice to return defaulters. So whenever a person is required to file return, suppose if he is not filing the return, so a notice will be given in Gstr 3A, and that notice will be given within whenever they leak the notice. So usually the notice will be served whenever you are not filing return. Once they give the notice, within 15 days you need to file the return. Okay, that is this 46. 47, 48, 49, 48 we don't have, but 49 we have payment of tax, interest and penalty and other amounts, that is various ledgers. What are the various ledgers maintained by GST portal on behalf of every registered person? We have electronic credit ledger, electronic credit ledger, electronic cash ledger and electronic liability ledger. Electronic liability ledger PMT1, electronic credit ledger PMT2, electronic cash ledger PMT3. So what is this electronic liability ledger? Whatever is the liability that you need to pay, so that liability is there in electronic liability ledger, that is the amount of GST that is payable will be there in electronic liability ledger, that is form GST PMT1, and that liability is divided into 5: TIPFO, T for tax dues, I for interest, P for penalty, and F for fee, late fee, and O for others. These are the 5. Okay, so TIPFO, so tax, interest, penalty, fee, and others. So TIPFO. So these are the 5 liabilities that will be there. And so to pay these liabilities, we use electronic credit ledger and cash ledger balance. Remember, the balance in credit ledger can be used for payment of tax dues only. But for payment of other 4 dues, we cannot use the balance in electronic credit ledger. We need to use the balance in electronic cash ledger only. So for payment of other dues, tax dues and other dues. So the balance in electronic credit ledger can be used only for payment of tax dues. And the balance in electronic cash ledger can be used for payment of any dues. Okay. That is with respect to this. How money will come into electronic credit ledger? Whenever you avail ITC in 3B, so we have a ITC table. In that we will take the ITC, then it will come. Or ITC 1, availment of ITC on closing stock. Or ITC 2, whenever a transfer the ITC. So based on that you can take the credit. How money will go into the electronic cash ledger? We need to make the deposit through challan, payment challan. PMT6 challan, we will make a deposit, or any refund granted, or TDS, TCS deducted by the other person will come into electronic cash ledger, which can be used for payment of GST. Then, what is the utilization of credit? Manner of utilization of credit. So first, can CGST be utilized for payment of CGSTS and IGST? Only 2. SGST for SGST and IGST, UTGST for UTGST and IGST, but IGST credit can be used for payment of any liability. Now, when IGST can be used for payment of any liability, the first priority is use it for IGST, then for CGST or SGST or UTGST in any manner, any proportion. Okay. So first for payment of IGST, then for payment of CGST, SGST, UTGST in any manner, any proportion. There is no priority there. Then CGST, SGST and UTGST, first for payment of its respective liability, then for payment of IGST. Okay. Then last, interest for delayed payment of tax. What is the interest on account of delayed payment of tax? The interest on account of delayed payment of tax is 18% per annum. So that 18% per annum is multiplied on the tax. So tax which is not paid or short paid. So we need to find the delay. So the delay is first date after due date till the actual date of payment. For that period, we need to compute the interest. Okay. Suppose if there is any delay in filing 3B, whether we need to compute interest on the gross liability or the net liability. So we need to compute on the net liability, because had you filed the return on time, how much you would have paid? Only net liability you would have paid. So therefore, for delay in filing 3B, you need to pay interest only on the net liability. Then actually section 47 we have, that is nothing but late fee. So we have different late fee provisions. I'm just showing this different late fee provisions for you to understand. So 1 second. So there are different late fee provisions that are applicable. So this is the chart that you need to remember. Okay. So this is the chart that you need to remember. I'll incorporate this chart and I will share this PDF again with you. Don't worry. So you all join in the Telegram group. So whatever are the changes that I have incorporated in this PDF, along with this chart also, that is late fee or extra information, whatever I have given. So I will immediately today itself, I will incorporate those changes and I will share with you for revision. Okay, you just take a print of it and you keep it so you need to just revise this one day before the exam and go for the exam. Done. So now look into this PMT5 for cash ledger. Yes. So cash ledger is PMT5. What is it I have given? PMT5 is cash ledger. Correct only. PMT5 is cash ledger. PMT3 is actually, refund order. So whenever we paid excess payment of tax, to credit that amount back to the cash ledger, so credit ledger, they will be passing an order, refund order, that is PMT3. PMT4 is communication of discrepancies. Okay, so come to this GSTR 1 and GSTR 3B. If there is any delay in filing GSTR 1 or GSTR 3B, so the late fee will be, if it is nil return, 10 rupees per day, subject to maximum 250 rupees. Okay. Suppose if it is other than nil return, then per day it will be 25. So if it is a nil return, 10 rupees per day. So 10 rupees per day, which means if the delay is 300 days, 300 days into 10. So is how much? So 300 days into 10 rupees. So will be, 3000. But we don't have to pay 3000, just 250 rupees. This is under each act. This under each act means under CGST Act, under SGST Act we need to pay. Suppose if the delay is only 30 days. So 30 days into 10, 30 days into 10, 300, but the maximum is 250 rupees only we need to pay. Then if it is other than, we'll return 25 rupees per day, but the maximum amount will change. Say this, if it does not exceed 1.5 crores, if it does not exceed 1.5 crores, 1000. If the aggregate turnover during the previous year exceed 5 but does not exceeds 1.5 but does not exceed 5 crores, 2500. If it exceeds 5 crores, then it will be 5000. Remember, exceeds 5 crores, 5000. Exceeds 5 crores, 5000. And does not exceed 5 but exceeds 1.5. Next slab, half of it. What is half of it? 2500. Then again half of it. What is that half of it? 1250 rounded off to 1000. Okay, you remember that? So 5000, next 2500, next slab 1000. Okay, so that is the maximum late fee. For example, 60 days delay, 60 into 25, 1500, but maximum 1000 rupees only. Suppose if my aggregate turnover exceeds 1.5 crores, maximum is 2500. So 60 into 25, 1500 or 2500, whichever is higher, whichever is lower, so 1500 will be taken. Okay, so like that we need to think. Then GSTR 5, GSTR 5A and GSTR 6. So these will be nil return, 10 rupees per day, subject to maximum 5000. Other than nil return, 25 rupees per day, subject to maximum 5000. No change in that. Actually, what is the general late fee? The general late fee will be 100 rupees per day, subject to maximum 5000. That was the provision up to November 21 exam, but now it has changed. That's what I am just giving you. Okay, so nil return other than 10 and 25, but the maximum fee will be 5000. Then GSTR 7 is TDS deductor. So GSTR 7, that is 25 rupees per day, subject to maximum 1000, whereas GSTR 8, 100 rupees per day, subject to maximum 5000. That's the difference here. 25,000, so 100 rupees, subject to maximum 5,000. GSTR 4, to whom GSTR 4 is applicable? A person opting for composition scheme. So a person opting for composition scheme is required to file GSTR 4 as an annual return. Who will be opting for composition scheme? Their turnover during the previous year does not exceed 1.5 crores. So if the turnover does not exceed 1.5 crores, so 25 rupees per day, subject to maximum 1000. So therefore this path will be applicable here. So 10 rupees for every day, subject to maximum of 250, and 25 rupees for every day, subject to maximum of 1000 rupees. Okay. Then GSTR 9, so that is annual return, 100 rupees per day subject to maximum 0.25% of the turnover. So this amount of late fee is payable under SGST Act also. Okay. Then we can file the returns now through SMS. 3 returns we can file through SMS: GSTR 1, GSTR 3B, and CMP 8. So this information also I will incorporate into these notes and I will make it available to you. Don't worry. Okay. So with this, we completed all the sections related to GST that are applicable for you. Okay. Now we have the next area, exemptions. These are through notifications. So this list of exemptions you should be thorough with. Okay. So in these exemptions, I am starting with agriculture related services. So what is this agriculture related services? Any service in relation to agriculture or agricultural produce is exempted. So means I am providing some service. That service is in relation to agriculture or agricultural produce. So that service will be exempted here. Okay. So now what is the meaning of agriculture? Agriculture means cultivation of crops and rearing of all life forms of animals other than horses. For what purpose? Food, fiber, fuel, raw material or other similar products. Okay. So agriculture means what? Cultivation of plants and rearing of all life forms of animals except horses. Sir, why horses is excluded, sir? Because horses are not used for agriculture, that's why. Okay. So then all other animals which is not allowed for rearing also excluded. For what purpose? Food. So example, poultry. Fiber, example, silkworm farming or sericulture. Then sheep farming will come. Fuel, cattle farming. Raw material, honeybee farming or other similar products. Then agricultural produce. Agricultural produce means the primary produce out of agriculture on which no processing is carried out or some processing or some processing as is usually carried out by a cultivator which does not alter its essential characteristics. So tender coconut will come under agricultural produce, and when you peel off a layer, coconut will also come under agricultural produce, and when you remove the shell, so then inside copra will be there, that copra will also come under agriculture produce. Okay, so the agricultural produce means what? The primary produce out of agriculture on which no processing is done or some processing as is usually done by a cultivator which does not alter its essential characteristics is known as agricultural produce. So any service in relation to agriculture or agricultural produce is exempted. So paddy is agricultural produce, but rice is not an agricultural produce. So in case of rice, so we have few exemptions, that is loading, unloading, packing, storage and warehousing of rice is exempted. Okay. Then only 4 activities in relation to rice is exempted. What about agricultural produce? All activities are exempted. So packing, loading, unloading, storage of rice is exempted. Then artificial insemination of livestock. Artificial insemination of livestock means what? Through artificial process they will be giving injections to the livestock. So that is known as artificial insemination of livestock. That artificial insemination of the livestock is exempted. Okay. So then service by way of storage or warehousing of cereals, pulses, nuts, spices, jaggery, raw vegetable fibers such as cotton, flax, jute. So now these are all the goods. Its storage or warehousing is exempted. What are they? Cereals and pulses, nuts and spices. What about storage or warehousing of agricultural produce? That is anyhow exempted. These goods are not agricultural produce, but its storage is exempted. Cereals and pulses, nuts and spices, jaggery, raw vegetable fibers such as cotton, flax, jute, etc. Unmanufactured tobacco, coffee and tea. So these are the goods, even though it is not agricultural produce, but it is exempted. 6 we have: cereals and pulses, nuts and spices, then jaggery, unmanufactured tobacco, then cotton, flax, jute, and then tea and coffee. Okay. Then warehousing of minor forest produce. Minor forest produce is also not agricultural produce, but its storage or warehousing is exempted. Okay. Fumigation in a warehouse of agricultural produce is exempted. Fumigation of a warehouse. Betel leaves and tendu leaves are agricultural produce. So anyhow, any warehousing of agricultural produce is exempted. So that's the reason why I have not included here. But so warehousing of betel leaves and tendu leaves, and even warehousing of indigo, a tropical plant, all these are there, but these are anyhow agricultural produce. That's why we did not include it here. Okay. Then next one, warehousing of minor forest produce is exempted. Then fumigation in a warehouse of agricultural produce. That is, there is a warehouse where we keep the agricultural produce. So that particular warehouse where we keep agricultural produce, fumigation is carried out in that warehouse. So that fumigation process will be exempted. Suppose if the warehouse is a place where we keep some other goods, okay, so then in this case what we will be doing, so then whether the fumigation will be exempted, no, that fumigation will be taxable. That fumigation is not exempted, that fumigation will be taxable. So that warehouse should be a place where we keep the agricultural produce. Okay, so that is about this. Then so QR code, e-way bill and other provisions are in rules, not in sections. Okay, so rules I have not yet discussed. I'm just telling you the sections which are all there. Okay, so there are a lot of items. That's what. See, I am doing a revision. If you want detailed information, so I request you all, so please to see the fast track batch. So please allow me to go in a flow. First I have completed all sections. Then I will be completing all these exemptions. Okay, so let me complete the exemptions. So minor forest produce. What is minor forest produce? Minor forest produce means herbs, then raw honey, bamboo that are all available in the forest is known as minor forest produce. Fumigation means so filling the warehouse with pesticides, insecticides, gases, etc. is known as fumigation, so that small ants or worms, etc. will die. That is known as fumigation. Okay. Then slaughtering of animals other than horses is exempted. So what is slaughtering means what? Killing animals. So they will kill the animals, take the flesh, and that flesh will be packed in packets and they will be giving it. So these slaughterhouses will be receiving some money. So that money received by these slaughterhouses is exempted. Okay. So that is with respect to this. So these are the various agriculture related services which are exempted. Okay. Then next point. So anything else? Then insurance services. Insurance services. So listen. So with respect to few insurance services that are exempted, number one, National Pension System Trust, NPS Trust. NPS Trust means, so there will be NPS Trust will be providing insurance services. You just remember NPS Trust. So NPS Trust will be providing insurance services for which we pay some premium. So that premium collected by the NPS Trust will be exempted. Okay. Unmanufactured tobacco means like tobacco that we get from the plantations, and that we will be just breaking it into powder. So that is known as unmanufactured tobacco. So which is put into the BDs, cigarettes, etc. is known as unmanufactured tobacco. As we do the process of cutting this, so tobacco plant, so due to that reason, it will not come under agricultural produce. Okay. Then, so insurance services, the first point, National Pension System Trust. Under NPS Trust, if there is any life insurance service that is provided for which any amount collected, that amount collected by the NPS Trust is exempted. Then next, group life insurance. Group life insurance by Army, Navy, Air Force, Coastal Guard and Central Armed Police Forces. So Army people, Navy, Air Force, Coastal Guard and Central Armed Police Forces, these 5 people will be receiving, like there will be a group insurance fund for these 5 people. So every month some amount will be collected towards a group insurance fund. So that amount collected towards a group insurance fund is exempted. That is this Army, Navy, Air Force, Coastal Guard and Central Armed Police Forces. Then next, number 3, service of general insurance business provide under government scheme. There is an insurance company, they are providing some general insurance services. So that schemes are notified by government. Under those schemes notified by government, they are collecting some premium. So that premium collected will be exempted. So this is that under government notified schemes. So what are those schemes? So these schemes are mainly targeted for agriculture and farmers, below poverty line, women and infants, and unemployed. Okay, apart from this, Nirmaya health insurance is also exempted. Then life insurance also same way. There is an insurance company which is providing life insurance services under government notified schemes. So what are government notified schemes? Schemes ends with the word Yojana is known as government notified schemes, and for that whatever money that is being collected will be exempted. Same way, micro life insurance where the sum assured does not exceed 2 lakh rupees, even that will also be exempted. Okay. Then insurance services provided to government. So that is government also wanted to take insurance. So government property, I'm an insurance company, I'm providing insurance service to government property for which I'm getting insurance premium. That insurance premium collected from the government is exempted. Then when my main insurance service is exempted, my reinsurance is also exempted. Okay. For example, I'm providing services to government, insurance service to government. Now premium collected exempted. Now that I will take reinsurance from another insurance company for which I will share my premium with them. So that premium received by them is also exempted. That is this reinsurance. So this is about insurance services. Then banking and other financial services. So that is services provided by RBI is exempted. So RBI providing service is exempted. Now import of service by RBI. If RBI is importing management of foreign exchange reserves, that is exempted. If RBI is importing any other services, that is taxable, and import of service is covered under RCM because it is there in Sir CG got salads. So therefore RBI will pay GST under RCM. Same way, there is a service provider who is a overseeing committee who provides services to RBI, that will be taxable under RCM because we saw Sir CG got salads in that for overseeing committee services to RBI. RCM. Apart from that, any other service provided by service provider in India to RBI will be taxable under FCM. Okay. Then number 2, there is a transaction in money. So this transaction in money without consideration. So transaction in money will be divided into 2. Transaction in money for a separate consideration, transaction in money without consideration. Transaction in money without consideration, neither goods nor services. Transaction money for separate consideration will be treated as service. So there we need to see whether the consideration is interest or discount or any other consideration. If the consideration is interest or discount, it is exempted. If there is any other consideration, including credit cards, interest involved in credit cards, that will be taxable. Then we don't have any RCM in this case, so FCM. Then number 3, services provided by banking company to basic savings deposit account holders under Pradhan Mantri Jan Dhan Yojana. So under PMJDY scheme, so people will be opening bank accounts, nil balance accounts. Now bank provides services to these nil balance account holders for which if bank charges any amount, on that charges there is no GST, it is exempted. Then number 4, forex transactions. Forex transactions means foreign exchange transactions, that is money changing from one currency to another currency. If the forex transaction is between two banks or two forex dealers, a bank and a forex dealer, so then it will be exempted. Okay, but when it will be taxable, bank or forex dealer and the customer, then it will be taxable under FCM. Then number 5, service by an acquiring bank. That is, so whenever we make the payment to debit card or credit card, etc. So then whenever we make the payment to debit card or credit card, so some amount will be deducted, so as processing fee by the acquiring bank. So that processing fee will be chargeable to GST if the amount, swipe amount exceeds 2000. If the swipe amount does not exceed 2000, then also processing fee will be there, but on that processing fee GST is not payable, that is exempted. That is this point. Then point number 6, services by following persons in respective capacity. That is a business facilitator or a business correspondent or agent of business facilitator or agent of business correspondent providing services to banking company in rural area. So then the commission received will be exempted. Okay. So renting of immobile property to RBI is what? So services provided to RBI. So to RBI, other service provider providing services to RBI, that will be taxable under FCM. Okay. So then next one. So we have services provided by an intermediary of financial services located in a multi-service SCZ. There is a multi-service SCZ in India, that is Gujarat Finance Tech City, and in that multi-service SCZ, the person who is located is an intermediary providing services to their customers outside India in relation to transactions so involving foreign currency. Now whatever money that this intermediary in India will be receiving will be exempted. That is this. So then healthcare services. So these are the 7 points that we have in relation to banking and other financial services. Then healthcare services. In relation to healthcare services, first you need to remember that healthcare services by a clinical establishment or an authorized medical practitioner or a paramedic is exempted. Okay. Now, what is the meaning of healthcare services? It can be diagnosis, treatment, care for any disease, illness, injury or pregnancy, including transportation of patient in ambulance, but it does not include 3: cosmetic surgery, plastic surgery and hair transplantation. So other than for restoring the body parts affected due to congenital defects, developmental abnormalities, injury or trauma. So basically these 3 will not come under healthcare service. What 3? Cosmetic, plastic and hair transplantation. But when these are carried out to restore the anatomy of the body parts affected due to congenital defects or developmental abnormalities or injury or trauma, then it will become healthcare service and it will be exempted. Okay. So then cord blood banks by way of preservation of stem cells. So there are some cord blood banks which will be collecting money for preserving the stem cells. So umbilical cord that connects the mother and the baby, the blood inside that they will be preserving, so that contains the stem cells for which they collect some money, that will be exempted. Then healthcare service in relation to animals or birds, that is veterinary clinic services. Then service of common biomedical waste treatment operators. There are some common biomedical waste treatment operators who will collect money from the hospitals for processing the medical waste. So whatever money that they are collecting will be exempted for processing the medical waste. Okay. Then so paramedics means who? Authorized medical practitioner, paramedics. Authorized medical practitioner means we know doctor, so registered with medical council. Paramedics will be coming under like nurse, then physiotherapist, then lab technician who will assist the doctors will come under paramedics. Okay. Then there are few points in relation to this. Renting of rooms to inpatients. Inpatients means for those who are admitted in the hospital is exempted, including sale of medicines to inpatients. Okay. Whereas catering service, that is providing food, supply of food to inpatients is exempted, but supply of food to outpatients or visitors or hospital staff, that will be taxable. Then there will be some consulting doctors who will be providing services to the hospital, and hospital collects the money from the patient and a part will be shared with the consulting doctor. For example, an outpatient paid 500 rupees to the hospital. So out of that 500 rupees, 300 rupees retained by the that is 200 rupees retained by the hospital and 300 rupees shared with the consulting doctor. That 300 rupees shared with the consulting doctor is also exempted. The 200 rupees retained by the hospital is also exempted. Then services provided by rehabilitation professionals. Rehabilitation professionals means, so these people are basically psychology experts. They will be providing care or counseling in medical establishments or educational institutions or any rehab centers. Okay. So now these rehab centers, when they provide, remember that rehab center should be established by government or a trust. Then only the services provided by these rehabilitation professionals and money received by them is exempted. So this is about healthcare services here. The next entry tickets. There are few entry tickets which are exempted. Few entry tickets are exempted irrespective of the ticket price, and few entry tickets are exempted when the ticket price does not exceed 500. First we are discussing entry tickets which are exempted irrespective of the ticket price. Remember 3 entry tickets related to animals. Number 1, zoo, then tiger reserve, wildlife sanctuary. So 3 things related to animals, that is zoo, tiger reserve, wildlife sanctuary. Then 3 places, museum, 3 places, museum, national park and protected monuments. 3 places, 3 entry tickets related to animals, 3 places, museum, national park, then protected monuments, and then 2 events. What are those 2 events? FIFA Under 17 Women's World Cup 2020 and AFC Women's Asia Cup 2022. So these 2 entry tickets, these 2 are sporting events. Irrespective of the ticket price, the entry ticket is exempted. Okay, total. So we have 8 points that we need to remember. First 3 related to animals, that is zoo, wildlife sanctuary, tiger reserve. Then next three related to the places: museum, national park, and then protected monuments. Then again two sporting events. So FIFA Women's World Cup 2020, AFC Women's World Cup so 2022. The 2020 World Cup of FIFA so got postponed to 2022. So that's why that is added as an exemption again. Then next. So ticket price, if it does not exceed 500, it is exempted. What is that? So remember, for performances, for performance entry ticket, performance related entry ticket. What is it? Performance related entry ticket. So dance. Then musical performance, concert. Difference between musical performance and concert is, so when a single person is giving musical performance, it is known as a concert. Okay. So musical performance, concert, then theatrical performance, that is drama, stage show, etc. So four tickets related to performance: dance, musical performance, concert, theatrical performance. Then next four is related to places. Okay, events. So what are they? Award function, circus, then pageant, beauty show, and sporting event. Four related to events: circus, award function, pageant, that is beauty show, and sporting event, any sporting event. Then one place. What is that one place? That is planetarium. So these are all the places which are coming under entry tickets which are exempted. Okay, if the ticket price does not exceed 500. So Reiki healing services means so using this bad energy which has surrounded us. So they will be taking out the bad energy, Reiki healing or pranic healing. So that is not a recognized system of medicine, that will be taxable. Only recognized system of medicine, healthcare service is exempted. Okay. So then pension services. So pension services, two pension services are exempted. Number one, Atal Pension Yojana of central government, and like that state government, any pension fund will be exempted. So contribution collected towards the pension will be exempted. Then services by specified organizations. So these are the specified organizations and services provided by them is exempted. So what are they? So services provided by NPS Trust, already we know. The NPS Trust we have seen. Then SEBI, Security and Exchange Board of India, receiving money from the listed companies, exempted. ESIC will be Employee State Insurance Corporation, will be receiving money from the factories, that is exempted. Then EPFO, Employee Provident Fund Organization, so from the establishments which are covered under PF Act, they will be collecting PF contribution, exempted. IRDA, Insurance Regulatory and Development Authority, collecting money from the insurance companies, exempted. NCCCD, National Center for Cold Chain Development, will be collecting money for establishing the cold chain to store the agricultural produce. That amount collected is exempted. Then foreign diplomatic mission located in India. So these foreign diplomatic missions are like UN organizations, embassies or consulates. So they are receiving money for processing the visa, etc. That is exempted. And even perhaps they will be getting refund of GST paid on inward supply. To get that refund, they will be given a status called as UIN, Unique Identification Number. Then CMPFO refers to Coal Mine Provident Fund Organization. That Coal Mine Provident Fund Organization, so like EPFO, Employee Provident Fund Organization. So for workers working in coal mines, there is a provident fund. So that is CMPFO, the contribution, PF contribution collected is exempted. So these specified organizations, any amount collected by them is exempted. Okay. Then charitable and religious services. So there is a entity registered under 12AA or 12AB. Wherever 12AA comes, 12AB also will be added, because there are two charitable trusts under Income Tax Act now, that is 12AA and 12AB. So there is a charitable trust under 12AA or 12AB of Income Tax Act. So they are providing charitable activities. What are those charitable activities? Public health, advancement of religion, spirituality, yoga. So then educational programs to physically or mentally traumatized persons, prisoners, and persons over 65 years residing in rural area. Okay. So first public health, then advancement of, first is public health, then advancement of religion, spirituality, yoga, then educational programs to physically or mentally traumatized persons, prisoners or persons over 65 years residing in rural area, then environmental preservation. So these are the four activities which are treated as charitable activities. For these charitable activities, if any amount is earned, then that is only exempted. Okay. Then next, services by old age home run by central government, state government or charitable trust, but only if the monthly amount collected is not more than 25,000. So monthly amount collected is not exceeding 25,000 per month per member, then it will be exempted. Okay. Then services by any person by the conduct of religious ceremonies. So priest, purohit, etc. Whatever money collected is exempted. Then services by special organizations for religious pilgrimage. So there are two religious pilgrimages, Kailash Manasarovar and Hajj pilgrimage. For that, if they are collecting any amount, that is exempted, but it should be a special organizations. So these are the charitable and religious services that are exempted. Then education services. Education services provided by an educational institution by way of conduct of entrance examination. There is an education institution which will be conducting entrance exam. Whatever money that is collected for conducting entrance exam is exempted. Then there are some training providers under Deen Dayal Upadhyaya Grameen Kaushal Yojana. Under this scheme, they will go to the rural area and they will be providing skill development, for which they will be getting some money from the government, that is exempted. Then services with respect to training program, for which entire expenditure is borne by the government. So this entire expenditure borne by the government, so there is a change here that 75% of entire expenditure. Okay. So 75%, okay, greater than or equal to 75% of entire expenditure is borne by government is only exempted. So it is not entire expenditure, which means, for example, there is a training program wherein 80% is given by government, 20% is collected from the students. Whether the entire training program is exempted, yes, the entire training program is exempted. Then any service provided by National Skill Development Corporation or Sector Skill Council or assessment agent or training partner. So these people providing any skill course like typewriting institutes, mobile repairing, animation, so tally, all these kind of courses run by the skill centers will be exempted. Then services provided to an education by an education institution is always exempted. Any service provided by an education institution to its students, faculty and staff is exempted. Okay. Whereas what is an education institution? So there are three category education institution. Category 1 is up to 12th standard or equivalent. So then category 2, education for obtaining a qualification recognized by law. Category 3, approved vocational education. So schools will come under category 1 and colleges, professional courses will come under category 2 and polytechnic colleges, diploma, etc. that will be coming under category 3. Now, any service provided by education institution is exempted. Now, service provided to education institution. What is that service? Transportation of students, faculty and staff is exempted. Transportation of students, faculty and staff, security and housekeeping, and then this catering service. Three services actually. Transportation of students, faculty and staff, catering, security and housekeeping services provided only to category 1 is exempted. Whereas admission to and conduct of examination provided to education institution, all three categories it is exempted. Then online periodicals and journals, only for category 2 it is exempted, but for category 1 and 3 it will be taxable. Then training in recreational activities relating to arts and culture. So there are some Bharatanatyam school, dancing schools, music schools, etc. or karate, kung fu. So all these arts. So training in arts, no restriction, no condition, always exempted. Training in culture. So training in culture is like languages, Vedas, Upanishads, etc. That is also exempted. But sports, training in sports, training in recreational activities relating to sports, they should be registered as a 12AA trust. So or 12AB trust. Then only it will be exempted, otherwise it will be taxable. Okay. Then services by assessment bodies under skill development initiative. What these assessment bodies will do? These assessment bodies will review the curriculum. For reviewing the curriculum, they will be paid an amount by the government. So that amount received by these assessment bodies is exempted. Then next we have, exemption. Some circulars are there in this regard. Unmanufactured schools. So catering service provided to category 1 institution is exempted, correct? Catering service provided to category 1 is exempted. So now in that category 1 will Anganwadi schools come? Yes. Anganwadi schools which will basically provide daycare, so will be covered under category 1. So catering service provided to this Anganwadi schools is exempted. Then, so there is an educational institution which will collect entrance exam fee. That entrance exam fee is not collected from the students, because only when they give admission they will become students. So, but this entrance exam fee collected will be exempted, provided it is an educational institution. A coaching center collecting fees for entrance exam will not be exempted, that will be taxable. Now, what is the meaning of an educational institution? So, educational institution is, so these three which will provide the education. So when there is a board, National Board of Examination, which will only conduct the exams, will that also be treated as educational institution? For example, NEET exam, JEE exams are conducted by this National Board of Examination. Now whatever money that they are receiving will be taxable or exempted. So the money received by them will be exempted because they are also treated as educational institution. That is this circular. Then services provided by government. Services provided by government. So we will take a break and thereafter we will continue with this. So far what we have seen is up to education related services. Then we have the transportation, renting and other miscellaneous services. So that we will be completing today. Advocate, arbitrator services. So today's agenda is that we will be completing these exemptions after the break. Okay. Then thereafter I will be giving you the rules related summary. So far what we have seen is section related summary, then the rules related summary. If those rules are already incorporated into the act section, so that rules we will not touch. Otherwise the remaining rules we will be discussing. Okay. In that, e-way bill, e-invoice, dynamic QR code in invoice and giving HSN details in the invoice, all those points will be coming in rules. So that rules related summary also I will be providing to you, and thereafter I will give you a summary of all time limits and all the form numbers and all the monetary limits in one place, so that this revision so you can make, so that will be helping you out. Okay. So now let's focus on to whatever we have been completed so far. Okay. So this is about exemptions. So up to education we have seen. We'll take a break and thereafter we will resume and we will discuss from services provided by government. Okay, welcome back. So now we are going to discuss what are the services provided by government. So there is central government, state government, local authority, and union territory. So services provided by them is broadly divided into two: specified activities and other activities. What are those four specified activities? Department of Post, transportation of goods or passengers, services of aircraft, services provided to aircraft or vessel inside or outside the precincts of an airport or port. So in short, you remember it as airport or port services, and services provided to business entities and other activities. So other activities are excluded from supply. These four activities are only covered under supply. In these four activities also, which are covered under supply, okay, in these four activities which are covered under supply also, we have few exemptions. For Department of Post, what is exempted? So all activities are exempted except speed post, express parcel post, life insurance and agency service. These four are only taxable. So remaining activities of Department of Post is exempted, like speed, book post, then registered post, money order, postcard, all those will be exempted. Then transportation of goods or passengers. So that we need to refer to the transportation chart for the purpose of exemption. So private sector and government sector is treated as same when it comes to transportation. Then airport or port service always taxable. We don't have any exemption with respect to this. Then services provided to business entities. So we have specific exemptions, general exemptions. In other cases, it will be taxable. So what are those specific exemptions? Municipality or Gram Panchayat services, for example, water supply made by Chennai Municipal Corporation or Chennai Metro Water Corporation to the business entity for which they will be collecting some water charges, that water charges will be exempted. That is municipality or Gram Panchayat services. Then interdepartmental services. One department of central government or state government to another department of central government or state government. For example, Tamil Nadu Police Department providing services, security services to income tax department will be coming under interdepartmental services, which is exempted. Then right to use telecom spectrum, that is allocated before 1/4/2016. Both one-time charges and annual royalty will be exempted. Okay. So right to use telecom spectrum, when is it allocated? Allocated before 1/4/2016. Both one-time charges and annual royalty will be exempted. What if it is allocated after 1/4/2016? So then it will be taxable. That one-time charges may be paid in installments, so that installment may be received now pertaining to the period before 1/4/2016. So then it is exempted. Annual royalty also allocated before 1/4/2016. It's annual royalty received now, so then also it is exempted. Then right to use natural resources allocated before 1/4/2016, but in this point only one-time charges is exempted, but not annual royalty. Then right to use natural resources to individual farmer. Anytime it may be assigned, both one-time charges and annual royalty is exempted. So these are the 3 points that is related to assignment of right to use natural resources. Then merchant overtime charges. Merchant overtime charges means, so Customs Department will be working on all days, 365 days, and 3 days only holidays for them. So 362, that is Gandhi Jayanti, Independence Day and Republic Day. 3 days only holidays. So remaining days they will be working. So even after office hours also they will be working. Due to that reason, so we will be paying some charges for clearances after office hours or on holidays. So that charges is known as merchant overtime charges. That merchant overtime charges payable under customs is exempted. Then share of profit petroleum. So here profit petroleum we need to understand. First of all, so government will transfer the right to extract petroleum crude or natural gas to the leaseholder. So now they will be extracting the crude oil. For which crude oil or natural gas, for which the leaseholder will pay two types of consideration. Number one, royalty will be payable, and number two, they will be paying the share of profit. So this royalty which is received by the government is taxable because only one-time charges is exempted. That too before 1/4/2016. Otherwise it will be taxable. So royalty will be taxable, but the share of profit is there now. That share of profit will be exempted. Okay. Now leaseholder will be recovering his expenses. So that recovery of expense is known as cost petroleum, that is exempted. Even the share of profit received by the leaseholder is not a supply. Okay, so that is with respect to leaseholder perspective. So from the government perspective, so there will be revenue from operations minus cost petroleum. What is cost petroleum? Recovery of expenses by the leaseholder minus royalty. So remaining profit. Out of the profit, a share will go to the government. So that share received by the government is exempted. Okay. Then safety certificate charges. Safety certificate is obtained by various establishments which are dealing with public at large. So like cinema theaters, establishments like hospitals, education institutions or malls, shopping complexes, education institutions, etc. So these people are required to obtain safety certificate, for which they need to pay some charges to the government, that is exempted. Then registration charges under any law for the time being in force. So registration charges, for example, to incorporate a company, we need to pay ROC charges, and for getting the property registered, we need to pay some registration charges. For vehicle registration, we pay some charges. That registration charges under any law is exempted. Then consideration for tolerating an act. Consideration for tolerating an act means we breach the contract, so we are paying some damages to the government, so that money received by the government is exempted. So then fee for birth certificate, death certificate, driving license, visa, passport. So for these 5 certificates, this is service provided to business entity on behalf of the employees of the business entity. So therefore money is collected from the business entity for giving these certificates, that is birth certificate, death certificate, driving license, visa, passport, that is exempted. Then guarantee commission is received by the government from PSU, public sector undertaking, as the government guarantee the loan taken by the PSU. For that reason, government receives a commission, that is exempted. Then excess royalty collection contractor. So generally government will be receiving variable royalty from the leaseholder. So they appoint one excess royalty collection contractor. That excess royalty collection contractor receives variable royalty and he will be paying fixed royalty to the government. So now in this case, that excess royalty collection contractor is required to pay GST only when fixed royalty is more than variable royalty on the difference. Suppose if the variable royalty is 50 lakhs, anyhow on that 50 lakhs leaseholder will pay GST. If the fixed royalty is 60 lakhs, so variable royalty 50, fixed royalty 16, so ERCC will be paying, so that 60 lakhs, so extra 10 lakhs ERCC will pay GST. Okay, so ERCC will receive 50, will pay 60 to government, on that 50 already leaseholder will pay, so ERCC will pay only on 10 lakhs. Whereas if the variable royalty is 80 lakhs and fixed royalty is 60 lakhs, anyhow leaseholder would have paid GST on 80 lakhs, so ERCC is not required to pay any GST. That is with respect to this excess royalty collection contractor. Then fee for FSSAI license from food business operators. So food business operators is required to obtain FSSAI license. They will be paying some license fee to the government. That government collecting the license fee will be exempted. Then fee for granting national permit. So national permit or any permit charges for travel between the states. Some permit charges are collected by the government. That permit charges collected is exempted. So these are the 15 specific exemptions that we have. Then 2 general exemptions. Number 1, services other than renting of immobile property provided to a business entity whose turnover during the previous year does not exceed threshold limit. So there is like renting of immobile property service. This first point not applicable. Advertising service provided by government to business entity. That business entity turnover during the previous year does not exceed threshold limit. Then the advertising service provided by the government to business entity is exempted. So next, another exemption is there. Services provided to business entity. Any service including renting of immobile property services, so provided to a business entity whose turnover, so that is during previous year, may exceed threshold limit, but if the value of supply does not exceed 5,000, it is exempted. See, first point and second point are 2 independent points. So first point is exempted if the turnover during the previous year does not exceed threshold limit. In the second point, the value of supply should not exceed 5,000. Okay. Then fines and penalties for breach of law is not treated as supply, first of all, because fines and penalties collected is not treated as consideration, because these are legal consequences. So on that, don't pay any GST. Then liability to pay GST in case of service provided by government. So apart from these specific exemptions and general exemptions, in any other case, liability to pay GST so is on government if the service were provided to business entity by way of renting of immovable property if the business entity is unregistered. So 4 activities we have seen. Department of Post, FCM, government only will pay. Number 2, transportation, mostly FCM. So but we need to refer to the transportation chart. Airport or port service, FCM. Services to business entity, renting of immovable property if the recipient is registered RCM, otherwise FCM. Any other service provided by government to business entity will be RCM. Next, services provided to government. Service provided to government is, so there are some activities which the government has to do as per 234 G or 234H of the Constitution. Now, they are not doing that activities, they are outsourcing it to me. So now I am providing services to the government, for which the government will give some money, so that will be exempted if it is pure service, or if it is involving both goods and service, where the value of service does not exceed 25%. The value of goods does not exceed 25% of the total value. So then it is exempted. For example, sanitization services. So I am filling the streets with sanitization. So now chemicals is the goods element and filling the street with sanitization is a service. So the goods element does not exceed 25%. Therefore, it is exempted. Suppose I am filling the, I am putting a road construction, that is cement road construction. Now what will be the value of the goods? The value of goods will be definitely more than 25%. So then the exemption will not be available, it will be taxable. Suppose if I am doing solid waste management, cleaning the garbages, etc. So then in that case, this is pure service, whatever money that I receive will be exempted. Now there is one CBSE circular in this regard, that is, so milling of wheat into wheat flour and supply to the government for distribution in the public distribution, ration shops. So here the goods element is more than 25%. So due to that reason, it will be coming under exemption, no. So then any training program for which greater than or equals to 75% of the total expenditure borne by government is exempted. And suppose if it is for students with disabilities, then entire expenditure borne by government is only exempted. So these are the activities in relation to government that is exempted here. Okay. Service provided to government and service provided by government. Now there is one question here. Sir, in relation to healthcare service, renting of premises for canteen and pharmacy, whether it is taxable? We don't have any exemption related to that, therefore it will be taxable. Renting of the premises to keep the hoardings or any ads, or renting of premises for canteen, renting of premises for pharmacy, all these renting will be taxable because that is not part and parcel of healthcare services. Okay. Then next, you look into the next one, renting including leasing, licensing. So renting including leasing and licensing is exempted, provided this is movable property. In case of movable property, 4 activities of renting is exempted. What are they? I have a motor vehicle that has a capacity to transport more than 12 passengers. So that motor vehicle I gave on rent to a state transport undertaking, that rent received is exempted. Next, I have a motor vehicle which is electric motor vehicle having a capacity more than 12 passengers. So that I am giving to a local authority, that is exempted. Then I have a motor vehicle that can carry goods, that I am giving to a goods transport agency, the rent is exempted. I have a motor vehicle which I am giving on rent to a person who is providing transportation services to category 1 institution. So then that renting is also exempted. That is this 4 points. Then service in relation to immovable property, renting of immovable property. If it is residential property given for residential purpose is only exempted. What if this is a residential property given for commercial purpose? That will be taxable. There is a property which is a commercial property which is given for commercial purpose, no doubt taxable. But if it is given for residential purpose, then it will be exempted, provided per day they are not charging more than 1000 rupees. Okay. Suppose if it is less than or equal to 1000 rupees, then it is exempted. So otherwise fully it will be taxable. So remember, in all these monetary limits, wherever the monetary limit is there, so if that limit crosses, the entire way it will be taxable. Okay. Then renting of precincts of a religious place meant for general public. So registered as a trust, there is a religious place meant for general public. It is registered as a religious trust or a charitable trust. The precincts of the religious place is given on rent for accommodation. So now per day, if it is less than 1000 rupees, it is exempted. Greater than or equals to 1000 rupees, entirely it will be taxable. Then renting of the premises for conducting marriage functions, halls, etc. So then in that case, per day if it is less than 10,000 exempted, per day if it is greater than or equals to 10,000, it will be entirely taxable. Suppose if it is rented for shops, then in that case per day if it is less than 10,000 rupees per month, 10,000 rupees per month, then it is accepted. If it is greater than or equals to 10,000 per month, so fully it will be taxable. So that is with respect to this. Then in case of motor vehicles, who will pay GST? Three conditions. If the supplier is other than body corporate, if the recipient is body corporate, and the rate of GST is 5%, then it is RCM, otherwise it will be FCM. Then look into the next one, sports related services. In case of sports related services, there are two exemptions. First exemption is there is a person who is a player, referee, umpire, coach or team manager. 5 people: player, referee, umpire, coach, team manager, providing service to recognized sports body is exempted. If they provide service to unrecognized sports body, it will be taxable. Apart from this, while any other person providing service to recognized or unrecognized will be taxable. Who are they? Commentator, curator, broadcasting agency, communication expert, all those people. Okay. Then, so whenever sponsorship money is collected by recognized sports body, that is exempted. If the sponsorship money is collected by unrecognized sports body, that will be taxable. So who will pay GST? So the one who is paying the sponsorship money is the recipient, and if they are body corporate or firm, they will pay GST under RCM. If the one who is paying sponsorship money is other than body corporate or firm, then the one who is receiving sponsorship money will be liable to pay GST under FCM. Okay. So here, example for recognized sports body, BCCI, if they collect sponsorship money from whomsoever they may collect, that is exempted. So example for unrecognized sports body is IPL board. If they collect it from body corporate or firm, it will be taxable under RCM. If they collect it from a sole proprietor, it will be taxable under FCM. Who is the recognized sports body? Just 6 points you need to remember. So one, National Sports Federation. So BCCI, India Hockey Federation, will come under National Sports Federation. Inter-University Sports Board, then Panchayat Sports Board, then Indian Olympic Association, Paralympic Committee. So for physically challenged people, then Central Civil Services Cultural and Sports Board. So these are the 6 sports board which are treated as recognized sports board, and if there is any event conducted by them, that's a recognized sporting event. Okay. So these are about sports related services. Then next point is services by an unincorporated body or a non-profit entity to its members. So there is an unincorporated body or a non-profit entity which is providing services to its members and they are collecting some charges. Suppose if that non-profit entity or unincorporated body is a trade union, association of traders, will be collecting membership fee from the members. So that will be fully exempted, whatever may be the membership fee if it is a trade union. Suppose if that association is providing the service which is exempted service, for example, healthcare service provided by unincorporated association to its members, anyhow that service is exempted. Even if unincorporated association provides it also, it is exempted. Then a resident welfare association. What is the resident welfare association? It is a housing society or apartment owners association. That apartment owners association or a housing society will be incurring some expenses, that is common area expenses, and will be recovering it from the flat owners as maintenance charges. So that maintenance charges, if the amount is up to 7,500 rupees per month per member, then it will be exempted. If the amount exceeds 7,500, then entirely it will be taxable. Okay. Then as an industrial or agricultural labor association, so that is, there is an industrial or agricultural labor association. So that industrial or agricultural labor association collecting money from its members, that will be exempted, whatever may be the money. Then apart from this, any other association collecting membership fee per annum, not per month, per annum, less than or equals to 1,000 rupees per annum, exempted. Greater than 1,000 rupees per annum, taxable. For example, ICI collects from the chartered accountants a membership fees of 1,800 rupees. 1,800 rupees, so will be entirely taxable, because per annum it is less than or equals to 1,000, exempted. Then, so if it collects more than 7,500, entirely it will be taxable. Then next one, transportation of passenger service. in transportation of passenger service, what you need to remember is what are all exempted. Apart from that, all other cases, it will be taxable. Okay. Now, first, railways. What is exempted in railways? Any class other than AC, and other than first class, other than AC and other than first class. So which means second class sitting, then sleeper class, then general ticket, that will be exempted. Then also metro, mono and tramway exempted. Metro rail, monorail, that is bullet train, tramway, these three are exempted irrespective of the amount, that is irrespective of the AC or non-AC or first class or second class, whatever it is exempted. Then airways. In case of airways, what is exempted? So transportation of passengers where the originating point or the ending point. So embarkation means starting point, disembarkation means ending point, is in northeastern states are Bagdogra and West Bengal. What are the northeastern states? 8 northeastern states. What are the 8 northeastern states that we have? The 8 northeastern states that we have is M, T, N, A, S, A, M, ASAM. So Manipur, Mizoram, Tripura, Nagaland. A for Assam, S for Sikkim, A for Arunachal Pradesh, M for Meghalaya. These are the 8 northeastern states. And for these 8 northeastern states, so if the starting point or ending point is in northeastern states or Bagdogra and West Bengal, then that is exempted. Or if they are receiving some money from government towards viability gap funding with respect to regional connectivity airport scheme. So there is a regional connectivity airport scheme wherein, so if they are using, like if they are providing transportation services in that airport, part of the money they will receive from passenger and remaining part will be received from the government. So that part which is received from the government is exempted for a period of 3 years. So they may receive it even beyond that, but that is not exempted, that will be taxable. Only if that is received from the government for a period of 3 years only, that money is exempted. Okay. So then we have, what about money received from passenger? That will be taxable. Then waterways. In case of waterways, inland waters exempted. Then coastal waters. Coastal waters means what? Coastal waters means like seaways. So seaways between places in India for public transportation is exempted. Okay. So coastal waters, that is seaways, public transportation. Say for example, India to Andaman and Nicobar for public transportation, that will be exempted other than for tourism purpose. Then roadways. In case of roadways, metered cab or auto rickshaw exempted. Non-AC stage carriage exempted. When it comes to contract carriage or stage carriage, difference is that stage carriage which stops at every stage of the journey, whereas contract carriage is usually point to point travel. So contract carriage is also exempted if it is non-AC used for public transportation. What if it is non-AC given on hire? That will be taxable. AC is always taxable. So apart from these cases, any other case transportation of passenger will be taxable. So this is what you need to register in your mind. Then next, transportation of goods. In relation to transportation of goods by railways, specified goods transported by railways is exempted. First, what are those specified goods? So for GTA service, there are 3 places where these specified goods will come into the picture. Okay, there are 3 places where these specified goods will come into the picture. Number 1, transportation of specified goods by railways, you can see here, and then transportation of the specified goods by waterways within India. Then GTA also you can see the specified goods. So the specified goods come in 3 places. So railways, waterways, that is coastal waters between places in India, and GTA. So there are total 7 specified goods. First 3 related to food, that is agricultural produce, food grains including flours, gram flour, wheat flour, etc. So including flours and pulses, milk and salt. Then number 3, organic manure, not fertilizers and pesticides, organic manure. So which is made up of cow dung. That will be coming under agricultural, that is 3 notified goods. Then newspapers and magazines. So then relief material for natural or man-made disaster. Then defense and military equipment, railway equipment. But this railway equipment is not specified goods for GTA. But the other 2 places, railway equipment will be coming under specified goods. So this is the list of specified goods. So now, these specified goods transported by railways is exempted. In case of airways, so airways within India, we don't have any exemption. But India to outside India or outside India to India, both are exempted. Okay. Then when it comes to waterways, inland waters is exempted. So transportation of passengers as well as goods by inland waters, that is river, is exempted, whereas coastal waters between places in India, so that is specified goods exempted, other goods will be taxable. Then coastal waters, India to outside India is only exempted, but outside India to India we don't have here. So which means that will become taxable. So transportation of goods by waterways from outside India to India is taxable. Okay. Then roadways, other than GTA or courier agency, all other transportation of goods by roadways will be exempted. So only GTA or courier is taxable. In the GTA also we have 5 exemptions. Specified goods just now we have seen. Then freight collected per carriage does not exceed 1500. What is that per carriage does not exceed 1500? Which means that we are collecting per carriage. So how much is that per carriage? When we will collect it per carriage, when the goods belonging to only 1%. So when the goods belonging to only 1%, then it will be called as freight collected per carriage. So that will be exempted if it does not exceed 1500. What will happen if it exceeds 1500? Entirely it will be taxable. Then consignment transported in a single consignee where the freight does not exceed 750. So freight does not exceed 750 exempted. When the 750 point will come, in that lorry we are transporting goods belonging to multiple consignors to multiple consignees, then it is 750. Then suppose if the recipient is central government, state government or local authority registered only to direct TDS, then also that freight collected is exempted. Or if the recipient is individual HF or AJP, all are unregistered and not having factory, then also it is exempted. Okay. So in the first case, fourth case and fifth case, don't see the freight, always it is exempted. In other case only you need to see freight does not exceed 1500 or 750. Now, wherever GTA services are taxable, there are 2 options. Option 1 FCM, wherein GTA will pay GST, or RCM, wherein consignor or consignee paying freight will pay GST. If GTA pays GST, the rate of GST will be 12%. If RCM, the rate of GST will be 5%. That is with respect to this transportation sector. Now, wherever this transportation sector comes, let it be government or private sector, both will be having the same treatment. Okay. Then import of services. Import of services divided into 2. OIDR services other than OIDR services. OIDR refers to online information database access and retrieval services. That is, whenever the service is mediated through internet and it is automated, it is known as OIDR services. For example, right now I am taking classes and you are watching the classes. So this live will be coming under OIDR? No, it will not come under OIDR, even though internet is required, but it is not automated. So it is live. So therefore it will not come under OIDR. Suppose if you are watching recorded classes, so then will it come under OIDR services? Yes. So because internet is required and it is mediated through internet first, and number 2, it is automated. So that will be coming under OIDR services. So OIDR services is always taxable. Import of OIDR service always taxable. Now who imported it? Non-taxable online recipient or other than non-taxable online recipient. If it is imported by non-taxable online recipient, supplier will pay GST. If it is imported by other than non-taxable online recipient, recipient will pay GST under RCM. Who is a non-taxable online recipient? An unregistered person importing services for any purpose, that is other than business or commerce, means what personal purpose, will be coming under non-taxable online recipient. Okay. So who is a non-taxable online recipient here? Any person who is unregistered and importing service for any purpose other than business or commerce is a non-taxable online recipient. For example, when you are subscribing for Amazon Prime or Netflix, you will be coming under non-taxable online recipient, wherein you are liable to pay GST under RCM or not. No. So FCM. So Amazon Prime or Netflix subscription you are taking and you are a non-taxable online recipient because you are unregistered importing for personal purpose. So the supplier is required to pay GST under FCM. What if it is imported by a company for giving it to their employees? Then in that case, so again it will be, even though it is for personal purpose, but it is imported by a registered person, therefore other than non-taxable online recipient, so the recipient has to pay GST under RCM. Then, if it is other than OIDR services, so what is other than OIDR services? So all other services. If it is imported by a non-taxable recipient, it is exempted. Who is a non-taxable recipient? Remember, generally what individuals will do, they will trust the government, correct? So individual, trust, government. These three people are non-taxable recipient. So who will be coming under non-taxable recipient? Individual, trust, government. Individual, trust, government. Individual should be unregistered, importing service for personal purpose, and trust, whether registered or unregistered, importing for charitable activities, and government importing for other than business or commerce will be coming under non-taxable recipient. Okay, so when it is non-taxable recipient, the liability to pay GST is not arising, it is exempted. Import of services by non-taxable recipient exempted. Import of service by other than non-taxable recipient will be taxable under RCM. That is this. And whenever you are liable to pay GST under RCM, you need to compulsorily get registered. Okay. Then construction services. So this exemption is not applicable to works contract service. The exemption is applicable only to construction service. What is the difference between construction service and works contract service? Construction service means only pure labor element. There is no goods element. Whereas in works contract, there is goods element as well as service element, wherein it is in relation to immobile property and the consideration will be lump sum. Then it is known as works contract service. So this exemption what we are going to discuss now is not applicable for works contract, is only for construction service. So look into the first point. I am constructing an individual house and whatever may be the amount received, so then the consideration received is exempted. So here individual house means what? House occupied by a single family. Actually kitchen is the base. If there is only one kitchen, then it will be called as an individual house, and the rent collected will be the construction cost will be exempted, whatever may be the amount. But remember, only construction is exempted, but repairs is not exempted. Whereas second point, if you see, construction or repairs or renovation in relation to a project which is covered under Housing for All Mission or Urban Awas Yojana, so Pradhan Mantri Awas Yojana, so that will be exempted. Okay, then number 3. So TDR, FSI and long-term lease. So floor space index or TDR or long-term lease, which is given to a promoter or builder. So that promoter or builder is required to pay GST under RCM. Now using the TDR, FSI and long-term lease, that promoter or builder will be using that for construction of residential as well as commercial. If it is used for construction of residential, and if that residential flats are booked before completion certificate, proportionate to that, the exemption is available. What is that? For example, you can see here, value of inward supply of TDR FSI is 10 lakhs. Value of inward supply of TDR FSI is 10 lakhs. GST 18%. So what is the GST payable under RCM? 1,80,000. Now, using this TDR FSI, they constructed some units. What are the residential units booked before completion certificate? Residential units booked before completion certificate is 28,000 square feet. So to the extent of the 28,000 square feet, so there will be exemption available. So 28,000 square feet divided by total carpet area of the project. What is the total carpet area of the project? 50,000 square feet. So how much is the exemption available? So 1,80,000 into 28 divided by 50 is the exemption, that is 1,800,000 is the exemption available. So remaining amount is the GST payable under RCM. So that is with respect to this TDR, FSI and long-term lease. Next, advocate and arbitrator services. So there are two categories here. So services provided by individual advocate other than senior advocate and firm of advocates. 4 exemptions are there. Number 1. If they provide services to a person other than individual, it is other than business entity, it is exempted. That is, services provided to a person other than business entity exempted. Number 2, services provided to another individual advocate or firm of advocate exempted. Services provided to central government, state government, local authority, government agency exempted. So then number 4, services provided to a business entity whose turnover during the previous year does not exceed threshold limit exempted. In other cases, it will be taxable, and who will pay GST? Business entity will pay GST under RCM. Whereas if there is a business, that is a senior advocate or arbitrator, 3 exemptions. First point, third point and fourth point, but the second point is not applicable. Okay, so now whenever service are provided by senior advocate to another individual advocate or firm of advocate, then that is not exempted. So we need to see the ultimate recipient or litigant or petitioner as the recipient, and that person we need to take and analyze accordingly. If that ultimate litigant or applicant or petitioner is central government, state government, etc., then it is exempted. Otherwise, it will be taxable. So, whenever senior advocate is providing service to another individual advocate or firm of advocate, the next person is there now. So, that next person, who is that next person? So, litigant or applicant or petitioner, that person is treated as recipient and needs to be interpreted accordingly. So that is about advocate and arbitrator services. Then some exemptions under Gstr Act. That is, if both supplier of service and recipient of service outside India, there is no GST except one service. That is transportation of goods by vessel from outside India to India. That service alone will be taxable. All other services will be exempted. Then there is a tour operator who is providing tour in relation to foreign tour, that is in relation to tour outside India to a foreign national. Now whatever money that is collected by the Indian tour operator will be exempted. Then number 3, there is an intermediary in India and a supplier of goods outside India, recipient of goods outside India. This intermediary connects those two people. Now whatever brokerage or commission that this intermediary receives is exempted. These are the 3 exemptions exclusively given under IGST, and all others are equally applicable for CGST as well as IGST Act. Then next, other exemptions, miscellaneous exempted services, transfer of a going concern as a whole or independent part thereof. So that is transfer of business. I have a business and the entire business as such I am transferring as a going concern. I receive some consideration, no GST on that. But transfer of assets involved in the business, there is GST. Then supply of services associated with transit cargo to Nepal and Bhutan. So that is, I am sending the goods to Nepal or Bhutan. When I am sending the goods to Nepal or Bhutan, that is, the goods are imported to Nepal or Bhutan. The goods are unloaded in a port in India because there is no, the Nepal and Bhutan are landlocked countries. There is no port in Nepal or Bhutan. So the goods are unloaded. The goods are unloaded where the goods are unloaded in a port in India. From that port in India to Nepal and Bhutan, the goods are transported through the land route, for which any service provided, that service will be exempted. That is known as cargo handling services provided to, or transit cargo services provided to consignment related to Nepal and Bhutan. That is this. Then services by way of collecting or providing news by independent journalists. So independent journalists who will not be working for any particular media news channel will be getting the news and will be selling the news, for which they get money, exempted. Same way Press Trust of India receives money for dissemination of information to all the newspapers. So money received by them is exempted. United News of India will be selling the footages of Parliament, etc., for which money received by them is exempted. Then public libraries, so lending libraries, so the lending fee collected for lending the books, exempted. Then there is a business exhibition which is conducted outside India. There is an organizer who is conducting a business exhibition outside India. Even though both are in India, supplier and recipient are in India, but the exhibition is held outside India, the money received is exempted. Then services by public conveniences such as provision of facilities of bathroom, washroom, lavatories, urinal or toilet is exempted. So there are some public conveniences, so which will be providing washroom facility for which they collect some money, that is exempted. Then toll charges. So toll charges, government will not be constructing the roads, so they will be giving it to builders. So these builders will lay down the roads and will be collecting toll charges on the vehicles which are using that road. So the toll charges collected is exempted, including overloading charges. This overloading charges is also collected at the toll plazas, even that is also exempted. Then suppose if government is asking a builder to lay down the road, and instead of collecting toll charges, the builder is collecting annuity from the government, will that be exempted? No, that is not treated as toll charges. That is consideration received in installments, that will be taxable. That is this latest CBSE circular. Then services by a performance artist. Who is a performance artist? The one who performs before the audience is known as performance artist in music or dance or theater, in classical or folk. So then that money received is exempted provided the amount does not exceed 1,50,000. what if the amount exceeds 1,50,000, then entire amount will be taxable, and this exemption is not applicable if they are acting as a brand ambassador. So this 9th point already we discussed, training in recreational activities relating to arts, culture, sports, but the sport should be registered as a charitable trust. Then satellite launch services. Satellite launch services is provided by Indian Space Research Organization ISRO or Antrix Corporation or New Space India Limited. Whatever money that they are collecting for providing this satellite launch service is exempted. So apart from this, there is no satellite launch services. So these are the various exemptions that we have in GST. So with this, we completed all section summary and all the exemptions that are applicable for your exam. So now, what is the agenda so that we need to see for the next session? So we will be discussing about various rules and the rules related summary. In that, e-way bill, dynamic QR code, e-invoice and other aspects will be covered. Then I will be also discussing the time limits and the monetary limits also. 3 things. So these 3 summaries I will be discussing. That is rule related summary, time limits, monetary limits and circulars. So summary of various circulars. We have a lot of circulars. With that, the entire portion, so you will be having a quick revision. So that you can use for revising this one day before the exam. Okay. Apart from that, what I told you is that I will be making RTP discussion and integrated case study and the MCQ session also I will be conducting. So therefore, with this, our rocket revision batch will be over. So again, tomorrow we will be completing that 4 points. That is whatever I said to you. That is rule related summary, circulars, monetary limits and time limits. Okay. So that is the agenda for tomorrow's discussion. Please ask your friends to attend live or at least watch this recorded. So this is a crisp summary of entire provisions. Okay. Thank you. And we will be meeting tomorrow. Take care.